Hey everybody, John Pyron, the business doctor. I'm sitting here with my good friend Roman Mitros. He's also a client of mine, and he is the broker for Primetime Mortgage here in the Sacramento region. And Roman, you and I were sitting at a restaurant the other night and having a conversation, and the question I asked him is, of all the mortgage people in this entire region, what makes you stand apart? And the dialogue that you shared with me, I thought was valuable enough that we should come together and put this on a video, because you shared with me information that I've never even heard or even considered, for that matter. Things like what mortgage people typically do to realtors, and how they use a lot of their time without the realtor ever getting paid. And then what sets you apart from all the other mortgage people, and how you can get stuff done a whole lot quicker than most mortgage people in this area. So can you kind of expand on what we were talking about and kind of share with that again?
Yes.
Share with me again exactly what we were talking about.
Yes, John. Basically, what mortgage bankers or mortgage people are known for by normal real estate professionals is, well, this guy is the loan officer, that guy is the loan officer. There is really no difference between this guy or that guy. But in reality, different loan officers, they work for different entities, for different companies. So most normal transactions go through one of three people. I'm not going to go into the hard money lending. I'm not going to go into portfolio lending, because those are very unique depending on people's situation. I'm just talking about normal residential loan and how the structures of those different banks or different companies, they work in the mortgage industry. So the largest, I would say, company that does mortgages would be a bank. So it's one of the larger banks, such as Bank of America, Citibank, and so on. So they have loan officers who are on their payroll, and also receive additional compensation via bonuses. So we will draw it and make it like this. This is a large bank. Then there is a direct lender. Direct lender, that's usually something similar to the large bank. They have a similar license. They are the banker. So usually that's a company. We'll draw it like this. Usually it's a company, and they only work with one bank, with one wholesaler, or with one funding company that is funding their loans. So we call it direct lender. These are typically larger in size than brokers, but they are smaller in size than normal banks. And such companies as Guild, Finance of America, Caliber Mortgage, they are direct lenders. Then there is a mortgage broker. Usually it's one guy who has a team of loan officers working for him, or it's one guy who does his own loans. And that's a typical scenario for a mortgage broker, where they work by themselves, they get license, and so they do everything on their own. They close 2-3 transactions, maybe 4 transactions a month. They don't really absorb any expenses, such as paying for the payroll for their employees or for super advertisement. They work on the relationships that they have, and with like 1, 2, 3 different realtors, or with some people that they've done business in the past, and that's how they survive. It's usually small brokers. Then there is also another type of brokers, that's brokers who hire a lot of loan officers. They put a lot of people on payroll, and they support their loan officers by providing them the office, providing them the processing team, providing them some type of an advertisement. And so they basically support them, and usually those people are paid obviously less money, because the owner of the company has to pay for all of the expenses in order to support the company. And so
before you move on, let me clarify and make sure I'm clear on this. So at the top you got the banks, Bank of America, Chase, those two people. In the middle there you got the direct lenders, which are the large lenders like Guild and those people. Then you got the one-man show mortgage person, right? That they're servicing, 3, 4, 5 loans a month. And then you've got a team approach where they have mortgage brokers, loan processors, assistants, that sort of thing.
Correct.
Right?
Yes.
So am I clear on that?
Right. Yes. It just this mortgage broker could be either a guy working by himself and not to absorb and not to have any kind of expenses, so it would be cheaper for him or for his clients, and so he just stays very low and does 1, 2, 3 transactions a month, same as same broker could hire, after let's say a year, 2 years, 3 years in the business, he could hire, 20, 30 loan officers, provide them with a support team with an office, and send them out there to basically get the mortgages to the company. So this could be either one person or it could be a team under one person.
Okay.
Now this is usually a company, and again there is one broker, one person who is the owner, but he signs up with the larger bank and becomes a direct lender. He gets lending license.
Sure.
The difference between these two companies and a broker, broker is usually very scrutinized as far as the paperwork. We have to disclose, I'm a broker, so we have to disclose all of the fees that we charge the client. We have to disclose a lot of information, where these guys don't have to disclose nothing, because under the license they don't show how much they make. So sometimes, for example, I close a transaction and on my fee sheet is going to say interest rate 4.25%, and it says there on the bottom somewhere that I'm making 2%. This guy is going to show 4.375, but it's not going to show how much he's making. So a lot of people are confusing it and thinking, oh wow, so this guy is making 2% and this guy is making nothing. No, this guy is making more than 2%, that's why his interest rate is higher, but he doesn't have to disclose his fees. That's why he is that's why he is the direct lender, because he does not need to disclose his fees.
Yeah. So these direct lenders out there that are all over the TV and commercials and Bank of America and everything, and all the great advertising they do with the big budgets that they have, you think you're going into a bank and you're getting a great deal, but in reality, they don't have to disclose jack crap to you.
They don't have to disclose nothing.
So whereas a broker, in your capacity, you have to disclose everything.
Yes.
Everything's crystal clear.
Yes.
Now, one of the things I want you to hit on is let's talk directly to the real estate person, right? So let's talk directly to the real estate person out there. One of the things that has impressed me working with you is from the time of the transaction starts, you guys can get that thing closed in like 10, 15 days.
Yes.
Right? Whereas I've seen this stuff drag out 30, 35, 45 days. The other thing I've seen is real estate people are the kind of the go-between between their client, and you kind of have a different model where you eliminate, you're just like, hey, give us all the stuff. Now go out and find another transaction. We'll take care of the deal. Can you expand on that?
Yes.
That is very valuable to a busy real estate person looking to go out and close more transactions.
John, first, to answer this question properly, I would like to bring up one other fact, that a lot of people, they think that brokers are giving somebody else's money, but some other bank, whoever they find. However, these people, they give their own money, or let's say large bank. Why large bank are so popular among normal population? Because they think, well, we need money. Who has the money? Well, bank has the money, so they go to the bank. In reality, bank is just as a broker as we are, because they don't give their own money. What happens is there are 3 agencies who basically finance the residential loans in United States, which is Fannie Mae, Freddie Mac, and Ginnie Mae. Ginnie Mae is basically known also as FHA, and Freddie Mac and Fannie Mae, they are known as conventional loans. So all of these 3 companies, they get the money from central bank, and then they come up with their rules on which they finance the transactions. They give basically, like for example, they give money for the banks to finance the transaction. So for example, let's say bank, they create the large line of credit, then they create a pool of loans that they fund out of this line of credit. Then after the loan closes, they send this pool of loans to Fannie Mae, Freddie Mac, Ginnie Mae, who closes this line of credit. And so then since Fannie Mae, Freddie Mac, Ginnie Mae, they don't have the servicing department that collects the payment. They say, hey, bank, you close this loan, you have the servicing department who can collect money for us. here's your additional money to you that we're going to pay you for you to service this loan. And so they collect the money. So they don't give their own money. They also go to Fannie Mae, Freddie Mac, Ginnie Mae to get funding for these transactions, for these loans.
So the same thing that you do.
That's exactly the same thing that I do. The only thing is that we go through so-called wholesalers, which are smaller organizations here that we can go and shop for different type of loan, for different type of pricing. Because as with the bank, as you know, one bank interest rate and another bank interest rate, they're different. Now, the same thing goes for here. Each bank, each wholesaler, depending on their structure, depending on how much their expenses are, how big they are, and so on, how they're willing to absorb the expense, how much they want to make, and so the same thing goes with their interest rate. So what they do, they add additional small margin on the interest rate that they get from Fannie Mae, Freddie Mac, Ginnie Mae, and then they push it to us. Then we have an agreement with them how much we want to make per transaction, and basically we get the funding. And so it's the same thing, only here we pick and choose which bank to go with. Now, how do I, for example, choose and pick which bank I'm going to go with, or which wholesale selling lender I'm going to go with? I'm going to look at their structure. I'm going to look at how proficient they are, if they deliver what they promise, what their turnaround is. For example, I can go to one bank and their turnaround time is 7 days. I go to another bank and their turnaround is 1 day. Now, this interest rate is a little bit higher than the other bank, so I will also take this into the consideration. But at the end of the day, to receive better interest rate on the loan that doesn't close is not as good as receiving a little bit higher interest rate on the loan that I can guarantee that closes. However, if the situation is very easy, I obviously will send it to the company that has the best interest rate. When the loan itself is harder to do, something happened in people's lives and they might have some bad credits, or if they maybe changed 3, 4, 5 jobs in the past 2 years, or whatever other situation might come up that is not normal, then I would send it to the bank that I know will close, but they will take a little bit longer and they might charge a little bit more money. But it's better than not closing this transaction at all, because if these people go to the bank, they don't get financing. The reason why? Because all of the banks, they don't take the actual raw guidelines, how they come out from Fannie Mae, Freddie Mac, and Ginnie Mae. Because they're so large and they have so many clients, they filter who they work on. So when, for example, a realtor calls me and says, Roman, I have a client, can you get him pre-approved? Now, I try to go off of the exact guidelines that were created by Fannie Mae, Freddie Mac, Ginnie Mae. And when they go to the bank goes into their system. They don't want to work with this client because they have to put more effort into this client. So they try to take cream of the crop. Now, some banks, if a person has worked in the same industry for 20 years, but in the past year he changed the job, going from one company to another company. Same industry, same title at work, everything is exactly the same. Some banks will not do the financing because this person has to be employed by the same company for at least 2 years. Another scenario, Ginnie Mae, which is FHA, it says minimum credit score to get 3.5% down financing has to be 580. Most of the banks, they will not do your loan with the FHA until you're going to have at least 640 credit score. I talk to some realtors and I say, hey, work with me, you will be able to close more deals. And they go, well, I work with my lender and he closes everything I send them. And I'm like, what do you mean he closes everything I send them? And like out of 10 loans, does he close all 10? No. I send him 10, he gets 3 approved, and then when we go into transaction, we close them. I'm like, you don't understand. If you send me 10 loans, because my conditions or my basically guidelines are the same as Fannie Mae, Freddie Mac, Ginnie Mae, they're more relaxed than those that were established by the banks. I can, out of 10 loans, out of 10 people that you sent me, I could probably approve 6 or 7. Even if I approve 4 or 5, I can double your income based on the same amount of people that you have. So that's the difference between working with a bank or with a broker, because broker goes directly into the guidelines Fannie Mae, Freddie Mac, Ginnie Mae.
So they have a lot more flexibility.
A lot more flexibility.
So let me ask you this, because I've seen you do this in action. It's like, person calls you up and says, hey, Roman, I got this person. Can you get them pre-approved, right? And I've been, talking to people for a long time, right? Normally it's like, yeah, let me get back to you, and then I need all this information. I need all this information, and like 2 or 3 days later, you got a pre-approval. But what I see consistently with you and your team, they call you up within less than an hour. There's a pre-approval. How is that? How do you do that?
That's something that probably I have developed. That's a skill that I have developed.
Okay.
Not many people have that. It just I have a mathematical, I guess, brain, and I like numbers. And after you do this for 22 years, as I have been, I see the numbers and I ask the questions. And when I ask the question, I could ask the question the same way 3 times or 5 times. The thing with with banks, let's say, with lenders, what they do with loan officers who have not been in the business for as long, or they don't have as much knowledge, when they rely on a processor, they ask you questions, but they then will try to make an appointment with you, which is a great thing. I like to do the appointments because I can do a little bit more thorough research on those things. But basically, the loan officers at other companies, they collect the information, then they give this information to the processor. Processor prepares this information in a proper manner so that then she can submit, or he can submit these documents to an underwriter. Who is the person who really knows what he or she is doing. Now, the question is, between these 3 people, some information gets lost. When I talk to the person, I represent the knowledge that the underwriter has, and when I speak to people, I ask specific questions. For example, how long have you been in the business? What type of work do you do? Are you W-2 or 1099? How much do you make an hour? How much was your W-2 for the last year? What is your credit score? Have you had bankruptcies? How many credit cards do you have? Have you made any late payments? I ask on the same subject, I ask 3, 4, 5 questions, and if they all come back with the same approximate information, for example, how much do you make an hour? Okay, $25 an hour. Well, that's approximately $52,000 a year. Now, how much is your W-2? Well, it's $47,000 that I made last year. How come? Did you take some time off? Oh no, I got a raise last year. How much was your raise? Well, it was $1. Okay, well, how much is your next raise is going to be? This, for example, this. Or for example, somebody says, yeah, I make $25 an hour, and then he says, but I made $75,000 on my W-2. So you receive bonuses, or how come? Or you do a lot of overtime. Now, in order for me to document the overtime, I have to look at the overtime for the past 2 years. So now I know that I need to ask for 2 W-2s for the past 2 years so that I can average this time that he has worked in the overtime. So it's a lot of different variances that I have to pay attention to. And again, it's not something that is being taught, it's just something that I picked up just being in the industry and just seeing, I mean, I've made a lot of mistakes. I mean, because a lot of clients, you have a lot of knowledge, you receive a lot of experience, and based on that experience, you pick up some information. So when people call the lender, call the banks, they need to collect all of the information, and so the underwriter doesn't have the ability to contact the borrower and ask the questions that I can ask. And so that's the difference when people go to the bank. First of all, bank is a much tougher underwriting guidelines. They have harder, tougher guidelines, plus they don't have the ability to talk to the borrower. So basically, the whole thing, they look at the loan and they say yes or no. They're not going to tell you, well, if you do this, then we can do this. Usually it goes to the underwriter. He looks at it. If it fits the box, yes. If it does not fit the box, no. So then it goes to the processor. Then the processor notifies the loan officer. Then the loan officer could go to the processor, and maybe they could work this out, the numbers. Hey, what if we're going to restructure it? What if we're going to do this? What if we're going to pay off some credit cards? What if this loan, we can close this loan at the time of the transaction? And so they're not, if they did not think of these things, then it's a simple yes or a no thing. What also upsets me a lot, that's when a lot of people, they apply for mortgage with some other companies, and they right away charge $500 for the processing fee, or let's say it's $450, whatever it is. They charge for the processing fee, for the appraised fee. So before submitting the loan, before finding out 100% that the loan can close, they pay an appraiser money to go appraise the property. Then they get the appraisal 5-10 days later. Then they submit the loan to the underwriting. Underwriting looks at the loan and says, oh, this guy doesn't make enough money. We cannot finance him. And then they call the borrower and they say on the 20th day of the transaction, I'm sorry, but your loan has been declined. What happens to my $500 or $450 that I paid for the appraisal? I'm sorry, we paid it to the third party. You cannot get this money back. So basically, sorry, you've been declined. And people just wasted $500 and not being able to buy the house. Yeah. That's like, and I see this over and over and over again, and some people come to me after being declined to different banks, and they're like, well, I don't want to order the appraisal until I know 100%. I'm like, I know 100% that I can get you this loan. No, but I already spent three times, I paid the money to different appraisers, and I still don't have the loan. So I'm like, okay, well then, 100%, I'm getting you financed. And sometimes, in order to motivate them, I say, hey, I will put my money on the line if it does not get closed. I'll reimburse you for that. And I have not had the situation because I make sure that the loan will get financed before or before I spend their money.
Well, a lot of it's experience.
Yeah, that's
like
basically yes.
So long, and then literally because of the natural gifts that you have with the numbers and so forth, you're able to get this stuff done a whole lot quicker.
The other thing is the structure. You were asking me, why can we close things faster? So normal process, normal procedure at all these different banks, how they work, with the loan officers, how they work, they have basically the same kind of concept here and here. So at the bank and at the direct lender, they hire a lot of loan officers, and then they give these loan officers a processor. So each processor has a team of loan officers that she supports. And so when one processor has so many loan officers, and then this loan officer has 3 clients, so now you multiply it. One processor works with 10 different people who have 30 clients. If this guy or this guy or this customer needs special attention, that's a time from a processor who is also working for this other 10 other loan officers. So it's a lot of loan officers, they have to stand in line. They file when they do the submission, and so when they do the submission, some files have to wait a day, 2 days, 3 days before this processor has ability to review the file. Now, what if, let's say, May or April, which are 2 busiest months in our industry, in our region, and each of these, instead of doing 3 deals, all of a sudden they do 6 deals. Now this person, her business just multiplied by 2-fold. So now she has to work on 60 different transactions. And you think you can close things on time with this type of business all of a sudden, showing up on your doorsteps. So like a lot of companies, they laid off a lot of people, because we had the slowest time last September, last October, last November. It was like really 3 slow times and slow months. And so they really tried to save money on the expense. And so a lot of processors got laid off. And so all of a sudden now this one processor has 3, 4, 5, 6 more loan officers that were passed to her from another processor who was laid off. So they are overwhelmed with what they have to do. And when you call this loan officer and ask him, hey, where's my transaction? What is going on? He doesn't know, because he's waiting for her to give you an update what is going on. Now, the same thing approximately happens here. I have a lot of people who work for banks and then loan officers who actually ended up doing financing through me because their lenders, their banks that they worked for could not get financed. The same approximately, I know the structure, how it works here. Also, I know the structure, how it works here. I worked for two different direct lenders, so I know the structure. I'm not saying anything bad about these guys. I'm not saying anything bad about these guys. It's just based on what I've learned by talking to people from here and working for people here, I've created something different. Because the main thing is what I learned, what stops me from delivering the best of the best, where I don't where I don't avoid my realtor's phone calls, but instead I pick it up and I'm proudly saying what the update is, like their loan is the only loan that I'm working on. And so I created the team. So my team approximately, instead of looking like this, it looks like this. Here's me, then I have one assistant, processor's assistant, processor, another processor, and just recently I hired another person who is working on all of the documents to make sure that we all stay legal and with all the paperwork that we're doing. So now this person is basically overlooking what we have done on the transaction, and then I communicate constantly between my processors, between my assistants, who always contact either the borrower or the bank to find out more information, what else is needed. They speak with the underwriters. So each file, we don't just submit, we fight for each transaction. We fight for each wrong answer by the lender, because sometimes they're wrong. They're also people. We don't take no for an answer because we know what we're doing. I only hire people who've been in the industry for a long time, who are very experienced, and so the knowledge there that we have is very superior. And so now these people are working together with me, and then also they are working between themselves in order to achieve really fast turnarounds. And so it's just the way we submit the files at the lender level. This is your 30 days. So for the first 2 weeks, lenders, they collect information from the borrower, they order appraisal, then they submit it to the underwriting, then the underwriter approximately on a, let's say, 20th day gives the approval with conditions. Then you work on conditions, so it's 23 days, then you get docs and title on the 26th day, and you close approximately on the 30th. Now, this is a dream come true for anybody who is in a banking industry, to have a scenario like this. Because what happens usually, this is happening, then on the 20th day, it goes to the underwriting, and underwriting says, oh, there is a problem. And all of a sudden now, these people don't have to collect the conditions. They have to work on a problem. Now, if there is a problem, this person is busy submitting other loans and closing other loans instead of working on a problem. So this loan gets pushed further. Or the way we created it, the same timeline, but we order the appraisal within 3 days of the approval, because we get the approval within 3 days. We collect all of the documentation, we submit it to the lender. Within 3 days, we receive the approval. We order the appraisal. Appraisal, we get it in 5 days. So approximately on the 10th day, we already have the appraisal, and we have an approval, and we know what the conditions are, but we collected the conditions while the appraisal was being done. So on the 10th day, we're submitting for the final, signing documents on the 13th day, closing transactions on the 15th day. Much easier, much simpler. The thing is that I don't have to wait for somebody to look at my files. I tell them to look at my files. That's why I have right now two processors who are working on my transactions.
And so this model, and this is the reason you and I are working together, right? So this model is we're going to basically duplicate this team over and over,
yes,
and over and over and over,
correct,
and over again. So never is it going to be a situation where you got one processor handling all this stuff, right?
Correct.
It'll always be a team approach.
Yes.
And each team has the ability to do X amount of loans. And once we get to that thing, now it's time for another team. So the team approach really allows you to deliver on your foundational promise,
correct,
which is, hey, we want to do it right the first time, and et cetera. Because the other thing you explained to me the other night is, okay, when you get to here, and if there's a problem, they go back to here, and then they go back to the loan processor. But what's interesting is this person doesn't go directly to the borrower. They go to the realtor and go, oh, by the way, Joe, I need this. Oh, by the way, Mary, I need this.
And that's
next
when,
thing you know, you got Mr. and Mr. Real Estate person running around all over the place collecting these documents, doing the loan processor's job.
Loan processors, actually loan officers assistant.
They become loan officers assistant, right?
Loan officer assistant. They don't get paid for that.
And in your model, the reason you guys are able to deliver on this, because once you get everything up ahead of time. If there's anything that needs to be happening with the borrower, you're going directly.
Yes,
you leave the real estate person alone.
Real estate agent. All we need a contract and person's number so that we can contact and start doing everything with the borrower. We want the realtor to go and find another transaction, another client, another place to make more money, to get more clients. Because with us, we're gonna take care of everything. Yeah. We will talk to you. We will update the realtor 2 times a week, every Monday, every Thursday, because it just happens that when they go back to the office on first day on Monday, and they wake up and they think, oh, what is happening? What should I do? So the first thing they usually do is call us, call loan officers to find out, hey, where is the transaction? And then we try to give them the same service on Thursday so that they would be able to relax on Friday, on the weekend. And then on Monday, again, we're going to tell them where the transaction, at what level the transaction is and when we're supposed to close. I mean, most of the times it's usually 4, 5, 6 emails that they receive throughout the process because we close fairly fast. And at the same time, it eliminates them sitting there and being frustrated, calling us, and nobody's answering the calls, because my number one motto is always answer the call. If you didn't answer the call back within 15, 20 minutes. So that, because that's the worst thing, when somebody's calling you, I mean, somebody's trying to find something out when they're getting their paycheck, and there is nobody who is picking up the calls. And so at the same time,
so pardon me for interrupting you, but so all the realtors that work with you, they already know ahead of time, hey, I'm going to get a check-in call on a Monday, I'm going to get a check-in call on a Thursday. They know it, it's predictable.
Sometimes in between, they would like to find out.
Sure.
It's sometimes we have some, eager people who are all of a sudden on Wednesday, hey, what is going on? I know that the appraisal was done yesterday. Have you received the appraisal? And so then the listing agent calls the buyer's agent, the buyer's agent, and then the buyer's agent calls us and says, hey, it was inspected yesterday. Have we received the appraisal? Well, it usually takes 2-3 days of getting the appraisal done after they inspect the property. So, I mean, we still get a lot of phone calls, just, in between. But overall, people who are not trying to babysit each transaction, but the ones who are out there going in order to get more clients, they just know that every Monday, every Thursday, they're going to get an update. And at the same time, they know that at any time they can call us or text us, and we will always answer. They will always be on top of what is going on in the transaction.
Perfect. You got a pause?
I just want to let you know you got like 10 minutes till your next call.
Oh,
It's
got it.
almost 3 o'clock.
Okay, all right. Okay, so that answers my question about that. So for, talk to the real estate person real quick, right there, and tell them how can they get a hold of you, how can they engage with you, okay? Why should they get a hold of you? Why should they engage with you?
All right, well, I've been doing it for a long time. I try to provide the best service for the realtors and for the clients. My office is easily located, easy to find. It is located on 80 and Garfield. It is located on 80 and Greenback, on the corner of Garfield and Greenback actually, and right next to the Starbucks. We have the team in our office all the time. I would love to have you, visit us, give me a call, we'll set up an appointment, and maybe we can have coffee at the Starbucks, and then go to my office, and I'll introduce you to my team, and you will see what we do. And if that's something that you like, I can guarantee that we can close things very fast, and I'm sure that you will be pleased by closing the transaction on the 15th, 16th day, and then have 2 weeks of relaxing and enjoying your downtime instead of stressing over when the transaction is going to close. And my phone number is 916-865-7888.
And so the thing that's really cool is the realtors that actually work with you, right? They actually close more deals
Yes.
because they actually have a lot more time to actually go and close more deals, and they're not playing, loan assistant.
Right? I spoke with one of the realtors last year. I had a realtor who called me up, and she said, hey, this transaction is not going through somebody else. If you can close this, I will give you all of my business. And then I revisited her again 6 months down the road after we closed numerous transactions, and I asked her, what do you like about working with me? Do you like working with me? She's like, you know what, I spoke with my assistant, and my assistant said, since she started working with me, the stress has basically evaporated. There is no stress because we close things so fast, and they don't have to get anything to us from the borrower. We get it ourselves, and everybody is on top of everything. Everybody knows what is going on, so they're not receiving the phone calls from the listing agent because we update the listing agent as well. So she said, you know what, it's just such a pleasure because we just no stress. And at the same time, we do provide the lowest interest rates in the area.
Fantastic. Well, it's been a pleasure. I've been sitting here having a chat with Roman Mitros, broker for Primetime Mortgage. Definitely you want to reach out to him. We're going to double, triple his business this year. and take on more and more realtors who want to close more deals, get more loans approved a whole lot quicker, so you can take time and travel and do more of the stuff that you want to do. Thanks so much, man.
Thank you,
It's
John.
really a pleasure.
Thank you.
You bet.